Welcome back to another video. In this video, I want to talk about dividend investing and taxes. But first, before I get started on that, I'm gonna quickly show you a quick update of my portfolio. So we are in the red for the day, and then we earned 25 cents on dividends, and then we're also down on the week. $68, and then I'm gonna go over why that is. And then we earned $3.94 in dividends. So my portfolio is heavily on finance. About 25% of my money is in finance, and then and my top holding is JP Morgan, and that is down because a lot of news about Buffett selling bank stocks and buying gold, and I think a lot of people are selling JP Morgan, but I totally think that's gonna recover over time. JP Morgan is a well-managed company, so I'm not going to sell it because Buffett sold his shares. But I will be putting in more money in consumers. I think that's been doing well over since I started this portfolio. Consumers up about 5%, as well as tech, but I'm not sure if tech can maintain that within the next year or so. So I will keep that around 13%. And that is all for the portfolio update. We are still up 128 and gains for all time. So we're not completely on the red just for this week. Okay, going back to dividend investing and taxes. So you will have to pay taxes. One is let's say you bought 100K worth of Apple, and 5 years later it's worth 300K. Now you're gonna have to pay taxes on that appreciation for the stock going up, and so you will have to pay about on that 200K you made in taxes if you're a growth investor. And then on top of that, you will also have to pay the income you made, the taxable income, since I think Apple also pays dividends, which is a small portion, but you do also get taxed on income that you bring in with the dividends. So, and the reason you have to pay is when you sell. So that is the reason a lot of people buy and hold, because when you sell you have to pay taxes. And then on top of that, a lot of brokers also charge you transaction fees when you buy and sell. The benefit with M1 is they do not charge you fees when you buy and sell. I recently sold Dominion Energy, and I didn't get charged any fees for that. And that is the case with there's a lot of new brokers that are not charging people for selling. So that's and then with dividends, you will have to pay on the income, and then depending on where you live, the taxes can be different on how much you pay, but it is lower than the income tax, so that is a huge benefit. And this is also the best time to invest, since interest rates are very low, and it's better to have your money in the S&P instead of having it in a savings account growing at 1% a year for most saving accounts, and some even it's like 0.1% for some of the savings account. But In terms of dividend investing and taxes, you will have to pay taxes. Usually it's around 15% for most areas, but it is lower than the tax on income that from, let's say, from your regular job. And that is all I got for this video. Thank you for watching. See you in the next video.